And welcome back. Thank you so much for joining me in today's video. As you guys can see, I have a special guest, and this is Ryan Lundquist of SacramentoAppraisalBlog.com. Welcome, Ryan.
Hey, thanks, Justin. Appreciate getting to be here today.
Absolutely. You've been on my channel a couple of times. I think we did a couple live streams, but you are definitely the expert regarding our greater Sacramento housing market. You post a lot of really good updates on your blog, and more recently, your YouTube channel as well. But today's video, really want to talk about how there's a lot of talk and discussion that's very heated and also controversial as well, that Wall Street is buying a lot of houses nationwide. And you came up with a really good tool to show the number of houses that Invitation Houses owns in California. So if you can briefly kind of describe what you did and what you found out, because I think a lot of people will get some value out of the research you went into.
Yeah, no, and yeah, thanks again for having me on. And so for years, I've wanted to visualize, where are these properties owned that Invitation Homes has? And I know back in the day, as you lived through the market and as I lived through the market, we knew that they bought thousands of homes locally. But what I finally figured out is, well, here's how I can track this company. They're very challenging to track. In the Sacramento area, they have between 50 and 60 DBAs. And so if you don't know the name of the owner, it's almost impossible to find these. And so what I did was I searched the tax billing address, because all of their properties have that same address. It's an address in Dallas, Texas. And then I looked at every single house in California that has that address, and I put them all on one map. And so what's stunning is just to see like the cluster in various neighborhoods. It's pretty much Northern California, nothing in the middle, and then Southern California. And so controversial's right. I think I've had hours and hours of conversation about this since the post went out. It went viral. Lots of views on the map, lots of views on my blog. But it kind of seems like people are either, in this place of like, private equity funds are destroying the housing market on one pole. And then on the other pole, people are like, hey, this is no big deal, because if they own 9,000 plus units in California, that's a nothing burger. It's not very much. And so very, very strong opinions on both sides.
Yeah, absolutely. Yeah, so it was interesting. You found your research was you found that there's around 9,100 houses owned by Invitation Houses, I believe. And
correct.
Yeah. Let me briefly kind of talk about too, like, because I think there's some misconceptions regarding what is Invitation Houses. So let me just share my screen real quick, and then we'll share your map as well, because it's pretty mind-blowing to see how many houses Invitation Houses owns in California, especially when they're only looking at, or they only really purchase in the Sacramento region, and again in the LA metro area as well. So pretty wild here. So let me share my screen. All right, so here's in Wikipedia.com. So it says here, Invitation Houses is a publicly traded company on the New York Stock Exchange based in Dallas, Texas. So in 2005, entrepreneur Dallas Tanner, interesting that they're based in Dallas, Texas. And also several others formed this company called Treehouse Group in Arizona. So between 2010 and 2011, they bought 1,000 distressed homes in Phoenix, Arizona. Obviously, that was one of the areas that was really impacted by foreclosures. Then the company was acquired by Blackstone in the spring months of 2012, forming Invitation Houses. So in 1 year, they were purchased by Invitation Houses or Blackstone. Invitation Houses' first home purchase was in April 2012. And within a year, the company has spent a whopping $4 billion on 24,000 houses nationwide, becoming the largest buyer of houses for rent in the US. Then in August 2012 through June 2013, they purchased 1,600 houses in the Tampa Bay area. In 2017, Invitation Houses merged with Starwood Waypoint. So Waypoint Homes was a private equity firm that I helped the main buyer back in early 2013 buy a lot of houses here in the Sacramento region. And they were acquired by Starwood, and then Invitation Houses and Blackstone purchased them. Then in November 2019, Blackstone divested its share of Invitation Houses. Then in July 2021, the company launched a joint venture in Atlanta, Georgia, with Pulte Homes, where Pulte was projected to design and build approximately 7,500 new houses over the next 5 years for sale to Invitation Houses, in which they plan to rent out. So now, having said that, here's a look at the map that Ryan Lundquist made regarding the total number of houses owned by Invitation Houses in California. So Ryan, if you can kind of just briefly explain what we're looking at here, that'd be helpful.
Yeah, absolutely. And maybe you can kind of just in the background be scrolling through so people can see what happens. You see two main clusters, a huge amount in Sacramento, a massive amount in LA. And it's mind blowing when I think zooming in and seeing just how these are very focused in particular
Yes.
neighborhoods. And so sometimes the critique is that, hey, this is a drop in the bucket compared to the total population. But I would say that residents who live in these neighborhoods would probably have a different point of view when a big investment fund owns that many. Okay. Now, one thing that I do want to note is that this data shows properties that are based on the tax billing address. So I finally cracked the code for how do I show these, but I think my estimate is actually conservative because Invitation Homes merged with Starwood Waypoint, and Starwood Waypoint in California has some addresses that aren't on my list. And so I don't know how big their number is for all of California. But I know, for instance, the San Francisco Chronicle did a piece and they talked about Invitation Homes owns 1,600 units in the Bay Area. Now, under the tax billing address that I searched, I mean, it's a few hundred at most. And so
Oh,
it just
wow.
goes to show that, like, there are pockets where I've got to add to this map eventually with Starwood Waypoint and find out what their addresses are. I do have one in Arizona that's starting to yield some results, but my goal is to eventually get more on there. But yeah, I really think it's stunning on the neighborhood level when you go, wow, like they own 50 properties in this one location. And I
Yeah.
think the struggle from the buying standpoint is that it removes supply from the market from typically neighborhoods that are first time buyer areas, more affordable. And so these
Hmm.
units, they don't impact the high end of the market. That's not the type of product they bought. And so when you look at their buy box, it's typically 3 to 4 bedrooms, entry level price point, and neighborhoods where a lot of first time buyers would shop. And so I think we have to sort of, keep those things in mind as we interpret a map like this and look at things.
Yeah, absolutely. I can speak from my experience of helping Waypoint back in, the team was formed with helping the buyer purchase houses in late 2012, early 2013, through around May 2013. And a lot of the properties that they were interested in were in South Sacramento, Elk Grove, and North Highlands, and the American River corridor here, close to Highway 50 here. These are areas that were, at that time, were houses in the range of 100,000 to about 150,000, and they purchased them all cash. We were writing offers left and right, probably on average around 15 cash offers blind every single day during a 6-month time frame. Just absolutely insane.
Yep.
Yeah, so it was mainly houses in the more affordable range. They purchased the house, they renovated it, and they rented it out. They were looking for a rent of around, let's just say they purchased it for $100,000. Eventually, once they fixed it up, they wanted to rent it out for $1,000. So that was kind of like their model. And again, they were acquired by Blackstone and later down the road. But yeah, they weren't purchasing houses for $1 million in the Fabulous 40s, for example, in
No.
Sacramento. Yeah, right. So I guess like based on your research too, as well, because there's like some, there's some information out there that investors right now are still buying houses left and right, really squeezing out the American home buyer. And they're the reasons why home prices have increased so much over the past several years. And by the time I film or I post this video, we'll have already posted my video regarding the act that was in, or the bill that was announced last week, called the End Hedge Fund Control of American Homes Act of 2023. This was a bill, if you guys didn't watch that video yet, that was enacted by an Oregon Senator, Jeff Merkley, and U.S. Representative Adam Smith, based in Washington, both Democrats. And it says here on their website, this crisis of hedge funds buying houses has exacerbated in recent years by an increasing number of large investors purchasing a significant percentage of single-family houses, squeezing out prospective buyers. So based on your research, what have you found out? Do you find that to be true in California or not?
Well, there's always a little truth in a narrative, but I think that when it comes to investment funds, there's a real false narrative out there. Okay. I would say that when we say things like BlackRock is dominating the market, that's ridiculous. The stats don't show that. There was this really viral blog post from medium.com that went all over the internet over the past week that said that private equity funds have a 44% share of all sales in 2023. And that's bogus because the real
What?
stat yeah, the real stat, and this has been all over. There's all these videos on TikTok and Instagram, and like, oh my gosh, Wall Street is, dominating everything. But you look at the real stat from John Burns Real Estate Consulting, and it's closer to about 0.5%. Or you look at Freddie Mac stats that show that big investors own somewhere around 2.5% of all properties. Okay. And so it's like, on one hand, there's this polarizing narrative. But on the other hand, like I said, I think people can be really dismissive of this reality of Wall Street investors salivating over residential real estate. And I find that, the truth is probably in the middle somewhere where it's like, hey, we don't want to hype this up to say that, regular buyers can't compete because of Invitation Homes. But we also don't want to, on the other side, say that this is just no big deal, because
Yeah.
it is a big deal if supply is being depleted in first-time buyers for those buyers. Okay, but I actually talked to a legislator after my blog post came out. I think it's the first time a legislator's office reached out to me after one of my blogs. So I was like, hey, that was cool, I guess. Um, but we talked. They wanted to know about my map and how I got my data and such. But one of the things that I did during the conversation is that I said, hey, look, we need to be talking about investment funds, but I want to encourage you to do all you can on your end to promote affordable housing. And so let's talk about, and I didn't get to mention specifics, but I would have said, let's talk about what does it look like to do some zoning reform? What does it look like to decrease the fees to get houses built in the Sacramento area? The permitting fees and everything, it's about $100,000. And so we wonder, like, why is it so difficult to build affordable housing? Well,
Mm.
that's one issue. And so I think that it was ironic. After I did my post, I felt good that I did my post first, and then these senators introduced that bill. So I'm not just following a media narrative, but the irony is that here we are vilifying the big investors, and I would turn the table to legislators and say, tell me what you're going to do to promote
Mm.
affordable housing, not just talking about this bill that probably has no teeth. What are you going to do? Kick out tenants? And that's another thing with this, is that
Mm.
sometimes in real estate, the bias is so heavily oriented towards buyers and sellers, but tenants can look at this and go, like, we technically have more units. And so it doesn't decrease supply for them. And so I think we need a balanced perspective here to look at the issue in multiple ways. But ultimately, what we need is we need more housing units. And that's what I would encourage the legislators to focus on. How do we build affordable housing? Make that happen. Don't just get your, 15 minutes of fame with, your
Yeah.
narrative about BlackRock, so to speak.
Yeah, it's really well said. And I actually 100% agree with you, because the best way to have more, or to make housing affordability better, is to have more inventory. And in my opinion, the best way to get more inventory is for more home building to occur. In my video I posted, I guess it was yesterday, when you guys are watching this video, I shared how, when looking at the total number of housing starts nationwide for single family houses, of course, it peaked back in 2006, and then it fell off the map. But the run up from 2010 to about now is way down here, whereas back in the 1990s through early 2000, it was way higher. So we have underbuilding across the United States for the past 15 plus years. And I really didn't really understand this until a few years ago, because When you think about a house being built today, that's going to be tomorrow's existing home sale. So when a buyer buys a brand new home, they sell it 5 years from then, that becomes part of the existing house inventory. And we all know we have a lack of houses for sale for existing houses. And because of all this underbuilding for past 15 plus years, this is really decreasing the amount of houses we have for sale. And on top of that, we had 3% rates in 2020, 2021. A lot of people have sub 3% rates, sub 4% rates. So why would they sell and buy a new house with an 8% rate or a 7% rate? So we have this mess regarding inventory numbers, and it's really hard to figure out how this will be improved next year.
Yeah, it's a tough market right now. And I think one of the things that I've been telling people, especially people who work in real estate, is like, hey, look, like we're starting 2024 exactly how 2023 has been, with low supply and low demand. And in order to see a significant breakthrough on either one, we're going to need to see a sharper change in affordability, whether that's through price declines or rate declines or financing programs. But it's sobering, because when you think about, say, the Sacramento region, we're missing about 10,000 sales so far this year from the pre-2020 normal. All right. But I want to say too that about 16,000 sales have occurred. And so sometimes we talk about housing like literally nobody is buying, and that's not true. But when you
Yeah.
look at listings, we're missing about 15,000 listings from a normal year. And that's also
Percentage
sobering,
wise,
but
what's that? How's that vary? Sorry, how's that vary between like a percentage wise for sales and inventory?
yeah, so it's
Yeah.
almost 40% on either side. So it's almost
Oh,
like, you take each down 40%, and so
mm,
that's why it's been low supply and low demand meeting.
mm,
That's why it's still been competitive. And in a normal environment, we might have really high supply and low demand, and then we get to see prices correct. And so
yeah.
that hasn't been the dynamic. But the one thing I was going to say about listings is that, yeah, we're missing about 15,000 listings, but there have been about 20,000 sellers who have listed their homes. And so it's like there's the part of the market that's happening, the part that's missing. But I think we're poised to still be subdued ahead unless there's a real change to affordability, because we're in a market where the math doesn't work for a lot of people still.
Yeah, especially for investors too. I mean, I literally just got off the phone this morning with someone looking to buy a home in the greater Sacramento area, putting 25% down, but the math doesn't really work. I mean, because rates are at 7%, prices are still relatively high. From an investing standpoint, it really doesn't make sense. You're looking to probably lose in the range of 250, probably to $500 per month. So investing side doesn't really make sense. And of course, for people looking to buy a house to move into, that demand has decreased, but also we're seeing a decrease in supply as well. I will say that I don't foresee a big increase in the number of new listings unless people are really forced to. If they're maxed out their credit cards, they lose their job, et cetera. But yeah, that's the thing that I'm kind of keeping my eye on in 2024 to see if there's any big changes, because so far, not a lot of changes on the horizon so far,
No,
unfortunately.
absolutely. And one thing I was going to say, if I can,
Yeah.
is that we are seeing a greater percentage of cash in the market, but I find that that's often misinterpreted, because you look at the cash percentages and you go, oh my gosh, like it's 23% or 25%. Some counties it's almost 27% locally, and so it looks like, wow, investors are gutting the market. But the reality is that there's a lot of people who have cash that are buying owner occupied homes. But
Mhm.
it's like this: today the pool of buyers has really shrunk, and there just happens to be a greater percentage of these buyers today who are using cash. It's not that there's like so many more cash buyers today, it's that the buyers who are less sensitive to rates, there happen to be more of them today. Like when I look at stats compared to last year, the number of cash buyers is actually pretty similar. It's
Mm.
just it's easier for them to play the market, right? Advantage to those who have cash. I know that that's tough to watch, but it's kind of the nature of the beast today. But it's not just investors here, though.
Yeah, absolutely. I mean, yeah, people buy a house with cash if they're moving from selling their house in the Bay Area, moving to a more affordable area, and they can buy a house with cash and not have to worry about 7% rates. That makes sense. So I want to wrap up this video. I really appreciate your time, Ryan, and thank you so much for joining me in today's video here. Also, if anyone wants to follow your website, also have access to this map as well, how can they find it and how can they find you?
Yeah, I'm at sacramentoappraisalblog.com, and I'm Sac Appraiser on Twitter and Instagram. I'm on all the socials, not on TikTok. I don't do TikTok dances. Sorry. Maybe
Oh
I'll get
man.
there eventually.
Wonderful. And I'll leave a link, if it's okay with you, Ryan, to your map that you made for the California market. And I think I found it to be really valuable because, yeah, just trying to search tax records to figure out who owns what, just based on my experience helping Waypoint homeless buy houses, they use multiple DBAs, like you mentioned, and different addresses this time as well. So yeah, it's really challenging to find that. So anyways, yeah, thank you so much, Ryan, for joining me in today's video. And also anyone watching today's video, check out Ryan's blog. This is not a sponsored video, by the way, but you put out a lot of good information on your website. And I really want to make this map accessible for anyone who really wants to see all the houses that Invitation Houses owns in California. So thank you everyone for joining me in today's video. And thanks again for Ryan for being a guest on the show.
Hey, thanks, Jason. Loved it.
All right. Hope you guys have an awesome day. We'll see you in the next video.